Hello, Matthew Bell with insuranceprescription.com, and today I want to tackle the question of can you get life insurance if you have cancer? The short answer is yes, usually you can. Bear in mind that this question, can you get life insurance when you have cancer, really can be generalized to other questions as well in the vicinity, namely, can you get life insurance if you have some kind of a terminal disease? Can you get life insurance if you have some other very serious condition? So some of the answers, some of the things we talk about are going to be relevant to other conditions besides cancer. Now, as a disclaimer, I am not here to provide you with specific insurance or financial advice. I cannot do so. This video is not intended for that purpose. If you need personal recommendations, evaluations, then you need to consult a licensed professional in your area, someone who is knowledgeable about your personal situation. This video is for general informational or entertainment purposes only. So as I said, the short answer to the question, can you get life insurance when you have cancer or some other serious condition, is generally yes, but there are a few subtleties that you should be aware of. Let's dive in. So the first thing that I'll say is in everyday speech, having cancer might actually be ambiguous between a number of different discrete stages or conditions. So there's a difference between loose speech, everyday speech, and speech that's used in a clinical setting. So it's not all the time that we in everyday language are going to use the word cancer the way a clinician or a doctor would use the word. So for example, a person might have pre-cancer. So pre-cancer, of course, is where cells or tissues or some condition a doctor thinks is likely to develop into or manifest cancer sometime down the road. Then you have cancer itself. So cancer itself is obviously some kind of a growth. Essentially, it's an abnormal growth. It can be either benign or malignant, the growth. If it's malignant, we usually call it cancer when it's malignant, and if it's a benign growth, we usually just say benign growth. But the idea of a growth is somewhat suggestive. The cancer is in many cases going to simply grow in an uncontrolled way. This uncontrolled growth can cause damage to surrounding tissues and structures. It can leach vital nutrients from the body. This kind of uncontrolled growth is often called progression, so we talk about a cancer progressing. And sometimes this can even issue in a person's death, especially in cases of very serious types of cancer. For example, Hodgkin's disease, leukemia, melanoma. Now, it's also worth mentioning that some cancers can be in what is called remission. Now, remission occurs when the cancerous growth is thought to be diminished in size or to be reduced in size, and in some cases, this kind of remission is tantamount to a recovery. But it's important to observe that remission is usually gauged, or the language is couched in terms of detectability. So doctors don't say the cancer is gone. They say something like that the evidence of the cancer is simply not there anymore. In other words, the cancer, there's no indication that they can find that the cancer is there. It could be there, but they can't find any indication of it given the tests that they're running. Remission can be either partial or full. Now, you can also have a recurrence. So recurrence is where the cancer comes back, but it comes back after a period of remission generally. Now, there can be questions about whether or not the cancer was simply there the entire time, whether it was in full remission and then came back. There's all kinds of questions. There are several different types of recurrence. And the different types of recurrence kind of map onto their severity level from an underwriting point of view. There is local, meaning that the cancer has come back in the same place that it was detected previously. It can be regional, which is where it's close by, usually in the lymph glands or the lymph nodes. And there can be distant, which is where cancer surfaces that they think was linked to the original, but that is not particularly close by to the location of the original cancer. There's a difference between primary cancer, secondary cancer. Again, I am not an expert, and this is not the place to tease out entirely those definitions. My point in running through all these terms is to simply say that the question of whether or not cancer is insurable is going to depend on where a person's at in this timeline. What type of cancer do they have? Is it primary? Is it secondary? Is it recurrent? Is your cancer in remission? Are you in treatment? And so on. A couple of words, when a person's being treated for cancer, if that cancer is basically not growing, maybe it's not diminishing, but it's often termed to be controlled. That is to say, the cancer is not getting worse, it's not getting better, it's just kind of staying in the same place. And then you can, on the more positive side, you can have a cancer that is responding. Responding to treatment generally means that it is diminishing size. If it is not responding, unfortunately, that tends to mean the cancer is still progressing despite the interventions that are being performed. before I hit harder the question of the insurability of a person with cancer, it's important that I at least give you a background to make sure we're on the same page with respect to what insurability actually means. So with private life insurance, generally speaking, when a person applies, they have to go through a process termed underwriting. Now, this is the procedure that a company follows to see if they're willing to take you on or to take somebody on as a liability or a risk. In other words, they're trying to gauge how likely is it that you're going to die. So to determine this, the insurer is going to look at your medical history. They're going to take a snapshot of your health. There might be a paramedical involved, some kind of an examination, a blood test, a urine test, possibly an EKG, a chest x-ray. All these things can be a part. They might look at your driving record. They might look at financial statements. They're trying to gauge habits and risk, anything that might be pertinent to the question of how likely is it that you're going to die. Ultimately, the result of the underwriting process is going to be to place the person who is applying into one or other of a category of risks. There are a number of these, but I'm just going to enumerate some of the most common. So there is standard risk. Standard risk just means your average. Now bear in mind that all of these risk categories are going to be calibrated for a person's age and for their sex. So for example, how likely it might be a person who's 85 might be average in terms of their life expectancy, but it's still going to be a very compressed, very short life expectancy at 85. On the other hand, if a person is 15 years old, if their life expectancy is average, that's a pretty long length of time. So when we say these different risk categories, you have to understand that they're also going to be related to other factors in terms of what the policy eventually is going to be issued as. But standard just means you're not any greater or lesser of a risk than other people. In general, you are about average, standard risk. Then you could be preferred risk. Preferred risk means that the insurance company believes your risk of dying is less than average. So you have a below average risk of dying. On the other hand, your rating could be substandard, which obviously indicates that the insurance company thinks that you have an above average risk of dying. But substandard rating still means that the insurance company thinks that you are an acceptable risk. They're willing to take it on, even though they think you do have a higher than average chance of dying. A substandard risk category will generally indicate that they're willing to take you. They're going to charge you additional premium, whether it's a flat extra or a surcharge, or whether they simply assign a higher premium amount that you're just going to pay indefinitely. There are different ways of understanding this, and again, this is not the place to get into that. And finally, the final category is decline. So if they decline you, that means they think you are so risky for one reason or other, or for a combination of reasons, that they don't even want to take you on as a liability. All right, let's put these two things together. So we have run through the different pre-cancer, cancer, cancer in remission, recurrent cancer, and now we've run through the various risk categories: standard and preferred, substandard, and declined. So if a person is super healthy, they don't have any cancer, they don't have any physical, they don't have any family history of cancer, let's say, then they're likely to get a preferred risk category when they're underwritten. If they're healthy, they're average, maybe they have benign growth, they might get a standard rating. But as soon as we start to get into bad family history, as soon as we start to get into malignant growths, other health factors like height, weight, proportionality, and different things that are unfavorable, we start to move into the substandard risk category. This can include, as I just hinted at, it can include a lot of factors beside cancer. So substandard risk could attend to diabetes that has to be controlled with medication. It could pertain to other health conditions, possibly psychiatric conditions, but also things like pre-cancer, for instance. If a doctor has determined that you have a high likelihood of a particular tissue developing into cancer in some short period of time, you're likely to get some substandard rating. If you have cancer and you're currently being treated for cancer, then your underwriting decision might actually be a decline. That's also possible that the company might postpone you. They might wait until the treatment has been concluded. They might say, you know what, we're not going to decline you, but we're not going to approve you either. We want the treatment to play out entirely, and then possibly they'll even want a period of time after that to make sure that there is no recurrence during that period of time, assuming the treatment is successful. But let's say either way, you're postponed or declined, you cannot get a traditional policy using the usual route. What options does a person have in that case? Because if you have some of the other rating classes, if you get a preferred rate, standard rate, or a substandard rate, you can still get the insurance. You might have to consider how you're going to be able to afford it. You might have to reduce your face amount over what would be ideal for your circumstances, but insurance is in principle available to a person with a preferred standard or substandard rating. But if you're declined or postponed, then you cannot get the policy that you were aiming to get. What do you do? Well, one thing that you should be aware of is many insurance companies offer what are called guaranteed issue policies. Guaranteed issue policies, I have an entire video just on this. I'll put a link in the description. I'll put the thumbnail up on the screen so you can see it. Guaranteed issue contracts don't have underwriting. You're guaranteed, just like it says, if you're eligible, and that's a different thing, see the video for details, then you are guaranteed to be able to get the policy. There's no underwriting. You're not going to be declined. But because there's no underwriting, guess what? The insurance companies are going to assume that you're unhealthy. You may not be, although if you're watching this video, you might be, or you're interested in it for somebody who is not healthy. And so they're going to assume this with a guaranteed issue policy. And therefore, the policy values are not going to often look as favorable as they would in a traditional policy. The death benefit may be severely limited. It might be far less than what you would be able to get in a different type of policy. Cash growth, if there is any, is probably going to be a bit stunted. And there could be other restrictions as well. It's not uncommon for guaranteed issue policies to be what are called graded death benefit policies, where a person has to outlive a probationary period or a waiting period before they even get the full death benefit. If they die within the probationary period, often the insurer is limited to a return of premium in terms of their liability for that policy. Another possibility is group term. Now, this is an interesting possibility because group term often is the second kind of policy that has no medical underwriting. If you are employed actively and your open enrollment period comes, then just like anybody else during open enrollment, you simply check a box and say, I want the coverage, and there's no, generally speaking, there is no medical underwriting performed. However, group term is generally thought of as a supplement. It's often termed in the benefit package group supplemental term. You're limited to open enrollment, and you also have to realize with group term, although it's not as noticeable as with the graded death benefit policies, group term is usually priced to reflect what's called adverse selection, namely the idea that the group term insurance carriers realize that some non-negligible percent of people who are applying for group term are doing so because they are unhealthy to the point where they can't get insurance privately. And so everybody's premiums at a certain age anyway, maybe 50 plus, 60 plus, they go up. The premiums go up because they are pricing to reflect this adverse selection. The other thing you have to bear in mind is that it's not portable. If you leave the company, your group term goes away. And even in some cases, if you go from active employment status to inactive status, you have to check with your benefit package, but your benefits may be suspended or eliminated. So you may lose your group term if you, let's say, go on disability for a period of time and are placed on inactive status. Every benefit package here is going to be different. You would need to consult with your plan administrator for details. Now, if your cancer is in remission, it may be possible for you, once again, to try and apply for a non-guaranteed, non-group term policy. It may be possible for you to apply for a regular type policy. It depends. It's going to depend on the type of cancer. It's going to depend on how long it's been in remission. It's going to depend on whether this was the first remission and you've never had cancer before, and a lot of other factors. But recurrence often permanently forecloses on a person's insurability, especially for some cancers, and that then would make a guaranteed issue or a group term policy almost the only games in town. Now, there are other strategies for insuring yourself, that is to say self-insurance. Annuities can be used, retirement vehicles if you have enough assets. In other words, the idea is you may eliminate the need for insurance. I would hasten to add, however, that the need for insurance needs to be distinguished from an optimized portfolio. You might not need insurance because you have the amount of money necessary, let's say, to pay for funeral expenses or to replicate your income in the event of your death, but it might be cheaper to do it. It would be optimal to do it with life insurance because life insurance can do those things for pennies on the dollar compared to maybe dollar for dollar if you're self-insuring. But if you are unhealthy to the point where you can't get a regular insurance policy, self-insuring may be the only game in town. Just let me briefly say that generally once you do have a policy, you needn't worry. Generally speaking, again, caveat, asterisk, check with your insurance agent, check with your group plan administrator for details here, but generally speaking, there's no exclusion for cancer. If you die of cancer and you have a policy, it's not like your policy is not going to pay out. The exceptions there would be things like accidental death and dismemberment policies that are obviously only going to pay for accidental death. Cancer is not going to fall under that umbrella. And another consideration is if you misrepresented yourself during the life application. So there is something called a contestability period. It's usually 1 to 2 years, which means that if you apply today knowing you have cancer if the insurance company asks you about health history and you misrepresent yourself, let's say you die within a year and the insurance company discovers that you died of cancer and the medical records indicate that the cancer was known a year before you applied for insurance, they're probably going to at least attempt to investigate that and possibly deny the claim, and they're within rights to do so for a misrepresentation that was germane, something that you misrepresented that was material to the application. They can decline to pay the death benefit, but there is a limitation on that. Generally, the contestability period, again, is 1 to 2 years. After that period of time, even if there is a misrepresentation on the insurance application, they cannot decline to pay the death proceeds. Ultimately, there are many variables here, but again, the upshot is for many people who have cancer, it is possible to obtain insurance. It may be and probably will be more costly, but it is going to be possible for most people in principle. If your expense to income is unfavorable, highly unfavorable, then it may not be practically possible for you to purchase it, but that doesn't mean that it isn't available to you. But ultimately, your own situation is going to be highly dependent on details that I'm not privy to. It's going to be factors such as your actual diagnosis, the cancer type, your family history, your prognosis, whether the cancer has recurred, whether it's in remission, what stage is it in, has it gone metastatic, what treatments are you undergoing, and so on and so forth. If something I said in this video was help to you or was of interest to you, please like the video, please subscribe to the channel, click the notification bell to be alerted to new content as it becomes available. I thank you so much for being with me today. I look forward to seeing you again in another video, and I wish you the best with your insurability, and I hope you get the coverage that you need.